Welcome to TradeTheMBI.com. This is John. This reports for the 9th of August. And, well, Wednesday served pretty much exactly as expected. We had a white candle on our intraday chart that gave a specific retrace value, and that turned out to be exactly where price went. Throughout most of the day, it was slightly down and then just stayed right there. Not a big deal. It's pretty much waiting for ABM yellow here to catch up. Now you've seen where almost all the ABMs are going to be at the 76. That is extremely bullish market in general when you have everything at the 76 level or above. You can go back and look at your charts before. Whenever they get to that level, you've got a pretty decent run of things. Last time it was, they started heading above right back over here in June. And it stayed that way. Now, that doesn't mean that it's not going to eventually reach a turning point, but solid positive shakeout off the reset. The difference is that we're going to have a higher high, and as soon as we make a lower shakeout, we all know what that means. You cannot have that divergence, and it's usually not very successful for very long, and you'll get some kind of a turn back situation within it. Not quite the same aspect with the NASDAQ, because you already had that setup take place, which gave the 50% retrace. Now you have a brand new run of the NASDAQ shakeout. The only problem is you've got the bearish spike up here of the orange over steel, and though you still have the rising shakeout, that's the only thing preventing a much stronger sell action. Part of that can be attributed to the fact there's just not really many other places to put your money at this particular point where you're going to achieve reasonable yield. You're just hovering right at the same spot, hasn't really moved much. Likewise for treasuries at this particular point, still overvalued, though below this peak 120.45 range, still 113 as a bottom side target. Just an ebb and a flow at this particular point. I think a lot of things are in holding patterns. People aren't sure whether they should be in safety, running from this, that, and the other. Oil supply really isn't an issue within this situation. So the elevation of price there, some of it's just bottleneck conditions and achieving equilibrium. But when you're talking about significant growth, some of this is about demand side, and it's something we were always looking for even last year. And you can see it playing out, because there's no way you're going to get to 5% growth without a significant increase in demand need for oil and oil products, and that really is going to have a significant impact. As far as price goes, more demand, usually the higher the price. Gold isn't doing anything much except for quietly during this soft downturn has been showing a significant improvement in the shakeout to where it is almost above 13.5. That makes any buy considerations a little bit more significant. The problem has been the failure of this reset of steel. You're not going to get a sustained move until that actually takes place. So we have to wait on that. So here's what we were talking about from the 5K chart. Let's shrink this back out so you can see what we were talking about. This little white candle, usually we look for the open of that setup. We were talking about it up here when we were at the peaks. Market opens up, nothing really much happening, still at the 76. Came down and then boom, right to it, right there. 53, which is a quarter tick under, and right after that pops back up, produces a gold above 50%. Which we expect to take to the highs, which in fact it did. Once it reached the highs though, the DOC spread along with that very strong, this is a power move here, right where it starts there, proves itself on the second bar, and you get the nice split down. Of course, this was a dip below the red line, so any bounce was expected to fail as you retest that low, which is exactly what's happening right now. This is almost like an advertisement for Trade the MBI. Couldn't be any more exact than that. I think that when you see this kind of algo activity produce itself in such clear and concise ways, it makes it very easy. There wasn't any doubt that this was going to take place. It was just for a lot of people, they were thinking, oh no, I'm going to go to the moon. Well, you still can go to the moon, but sometimes you have to take a little refuel break, those kinds of things, that we exactly come to the alcohol activity spot. I think we're sort of over the idea that there are coincidences in some of these aspects, but people can still hold on to that if it makes them feel better. But the reality is we knew it and made it very easy to not be shocked about where price was headed in this particular case. So this was an easy Wednesday. Thursday, we don't have anything specific on that other than we just had this dip below the red line, so we expect these lows to be revisited here. But that could happen long before the market is even open and before people on the West Coast are even awake, let alone the East Coast. As always, though, I will keep putting up the charts as relevant. Trade well.